it's all about risk control at the moment. We've seen risk shoot up here in Asia at the start of this coronavirus season, and then move into developed markets. And we've seen the turbulence move in the same direction. Now, in the Asian market, and specifically China, we saw a quicker recovery, mostly because of the quick actions by the government, and we saw flow coming back quite quickly. In European markets, we see a lot of turbulence, especially in Italy. And then in U.S. market, there has been what I call an information gap. So the government response and the actual virus cases, there has been a bit of a lag between those two efforts. And so we're going to continue seeing volatility in the U.S. But nevertheless, we are looking for opportunities where they arise. Right now, we see opportunities in the Asian market, specifically in China. But it's very important to have downside risk protection online. We've seen a lot of investors buying those because we've been pushing them for quite some time now, and they've been protecting investors' portfolios. But I see that continuing. So don't let up on the risk control and the downside protection.
Paul, thinking about that sort of downside protection, I'm kind of confused. You have the White House coming out and suggesting that we're going to spend over $1 trillion to prop up small businesses and to put checks in the pockets of every American. How do you think that the market has read this? Because obviously we closed higher for the day, but the futures, of course, are lower. There's an argument to be made, isn't there, that when we think about U.S. futures hours ahead of an open, that they're really not a great indicator, at least these days, of how the market's going to perform?
Well, I think that the market turbulence is led by uncertainty right now. So when the virus hit the U.S., like I was saying before, there was an information gap, right? The government, the officials, the administration were much more positive than everyone else, the scientists. And until that comes together, we're going to see further turbulence. And it's not going to be about the stimulus package per se. That's not going to, stop the turbulence in the market. It's about creating a little bit more certainty about what we're up against. And until the administration, until everyone is saying the same message, it's going to continue the turbulence. So that's what we're looking for. When the World Health Organization came out and started calling it a pandemic, I saw that as a positive move because we had a name for it at that point. And that created, and once you have a name for it, you can start assessing it in terms of risk. And then when the U.S. started changing its tone, especially the administration started changing its tone, that was the next positive. But until state governments and federal government in the U.S. start singing the same tune and understand the seriousness of the virus, there's going to be that uncertainty still, and that's going to transform into volatility in the market.